Tick-tock, time's a-wasting. As I record this, there are 6 weeks left until year end. And even if you're watching this and it's early December, or even if it's December 26th, December 27th, there's still some things on this list that you can do. So these are tax planning things that you can think about towards the end of the year. So let's jump right in. Okay, the first one is if you have a flexible spending account, an FSA. Most of those accounts are use it or lose it. So take a look at that account. If you have unused money in that account, be sure to use it. Some companies, it depends on how their rules are set up. Sometimes you can get a small rollover, but it tends to be very modest. So look at that flexible spending account. Make sure that you've spent all that money. Okay, 529 accounts. You can make a gift to your kids and put money into their 529 account, and that will grow tax-free. And you've got till December 31st. Now, you got to get that money in. I believe it has to be postmarked by December 31st. So you still have time to do that in 2023. That amount, each parent can give each child $17,000. You can give it to a grandchild. It's quite liberal as to who you can give that money to. You can give it to a niece, a nephew, and it's gift tax-free for them up to $17,000 in 2023, $18,000 in 2024. Let's keep going. Okay, retirement plan contributions. If you didn't max out your 401k, if you haven't fully funded your IRA, now's the time to do that. So take a look at how much you can put in the account. If you have extra money, why not let that grow tax-free as opposed to keeping it in the bank account? Make sure you have an emergency fund though as well. You should also know that at least for the IRAs, you have until your final tax filing deadline to get that money in. But why not get it working for you now rather than wait until April? Okay, next one is, and this is one that takes some time, harvesting investment losses. So you can actually look at some of the losses that you have, and you can actually harvest some of those losses. I'll put a link. There's a lot of rules and regulations about tax law harvesting, and I'll put in the show notes what the requirements are there, so you can look it up yourself. But if you still have time to do tax loss harvesting, that can be useful. It's also good to know that you can take a $3,000 capital gain loss and offset that against your ordinary income. That hasn't been indexed, I don't think, since 1976. So it's still at $3,000 there. So you are limited, but you can roll over the excess into the future. So if you don't get to write it off this year, you can write it off next year. Okay, another thing to think about doing, to the extent you have charitable intent, you want to make a charitable donation, but maybe it's December and you're not quite sure which charities you want to support. There's a very simple tool called a donor advised fund. It's basically just a custodial account. Companies like Schwab and Fidelity offer these accounts. They tend to be super easy to set up, super flexible. The nice thing is you put money in today, you get the tax deduction today, but you can take many, many years to decide who the ultimate beneficiary of those dollars are going to be. So just look up Donor Advised Fund. It's a simple tool. It's a powerful tool. And you have until the end of the year, December 31st, to get that done. Okay, let's keep going. We talked about gift tax exclusions. Kind of related to that is if you have a child in college, you can actually pay their spring tuition maybe before 12/31, and again that is basically it doesn't count as a gift to your child if you're paying the university directly, right? But many of you will qualify for an educational tax deduction. So if you can pay next semester's tuition, some colleges allow you to pay spring tuition ahead of time, so you can get that educational tax credit. I should mention in all of this, I'm not an accountant. and you should talk to a professional. My goal in this video is to give you some things to put on your radar screen, right? Year end's approaching, and unfortunately, life is busy. And for many of us, it's not until, you know, a couple days before Christmas, and then many of us get time off between Christmas and the first of the year that you can actually breathe, relax a little bit, and then you're like, oh yeah, what are these other things that I need to do? So I'm giving you a list of what some of these other things that you can do. Another thing is what's called the SALT exclusion, which is the state and local taxes. Can you pay, if you're required to pay estimated taxes, and if your state allows you to pay estimated taxes, typically the fourth quarter of the year payment is not due till January. But if you make that payment in December, then you can use that as part of your SALT exclusion. Now, for many of us, our standard deduction is so high that we're not going to itemize, so it might be less valuable to you. And speaking of the standard deduction is something that's really valuable to all of us. So if you're married and filing jointly, this year, the married filing jointly standard deduction is 29,200. I'm sorry, 2023 is 27,700. 2024 is going up to 29,200. And if you're above 65 years old, you get an extra $3,000 as a couple that's married filing jointly. So that means, and that's off of your AGI. So your adjusted gross income on your taxes could actually be this year, you know, the 27.7. If you're over 65, that would take you up to $30,700, and you're paying no tax on that. And then if you look at the income tax brackets, you're paying very low. The U.S. has 7 income tax brackets, and the 2 lowest are 10% and 12%. So you can take advantage of those low tax brackets. And for some of you that are in those low tax brackets, we call it in financial advising, we call it filling up the low tax brackets. So you want to fill up those 10% and those 12% federal income tax brackets. And one way to do that is by doing a Roth conversion. So you don't have to do the whole account. You can do part of it. So I would suggest you work with an accountant and or a fee-only financial advisor and look at that and say, what are my taxes? Can I do a partial conversion and stay at these low tax rates? So I hope you found this video helpful. If you did, you're going to love this video here where I talk about the tax changes that are taking place. Really, the tax changes that have not taken place, I should say, which are the IRS sneaky tricks. So be sure to watch that video. I'll see you in there. Bye-bye.